Hello traders, Damien here. As you can see, we are in the live market here. Prices moving up and down, and the ticks are counting down. It's just a slow market right now. But I wanted to make this video to address a post in particular, and also for the newer folks to appreciate the value of having tools, using these tools correctly, and the value that knowing how to use ratios and harmonics and how you can navigate through the price action and have very precise targets and achieve an overall very profitable trading session. These are my trades for today. I took one trade that ended up being a losing trade, and then I took another trade to the downside, which was a very nice winner. So we're not going to get into the specifics of the trade as they are beyond the scope of the purpose of this video, but I do want to point out certain things. In here we have an expectation. We have the market produce a very nice projection, achieve a very nice new structure high, and the market came down here into a higher low, which was an expectation, and a nice rotation here which prompted my long. So I'm not going to get into the specifics again because they are beyond the scope of this video, but I wanted you to appreciate the value of ratios and harmonics. As we can see here, we have a very precise correction into the 618. Okay, now the 618 is one of the ratio requirements for a perfect ABCD pattern, harmonic pattern, which is the basis and the foundation to most of the advanced harmonic patterns like the Garley, the Bats, and all of the other things. They all have some variation of an ABCD pattern in them. Okay, but I wanted you to show you this so you guys can see the precision by which the market seeks symmetry and how we can use market harmonics to have very precise target expectations from here to here. Also, if we want to, and this is the only time in this video that I'm going to use the extensions as they are a little more in depth, but you can see the precision by which price touched that 127 extension. It's not coincidental, guys. Fibonacci ratios work with a very high degree of precision. Okay, and when you tie those with expectations to what kind of a correction you should get and structure in that area, helps you come out with a very, very solid way of understanding where people are willing to take on risk and where it is safe to enter trades. Okay, so I just wanted to show you here, very precise 618, very precise 127 extension. We had a 1-to-1 completion. This is a perfect ABCD pattern, of which if we were to trade this up, okay, the rules call for you enter, you break even at the 38%, and you take profit at the 618. Again, we have another situation where harmonically price came precisely to the ratio that it was supposed to come to, and then we had a continuation to the downside. Okay, now if we take into account this, okay, we can have certain expectations. Okay, now the market is not going to be 100% perfect every single time in getting into the area of interest and turning around, but you can have a basic clear high, clear low. You can have a zone here of where you could expect to seek profit. Now I saw this in real time, but I also saw a market that was accelerating in favor, so I was as aggressive as I needed to be on my trailing so I can maximize the efficiency of this swing. And as you can see, like I said, I wasn't going to get into it, I'll just briefly mention it. I entered on the rotation. I knew it was slightly early, as the expectation was for price to eventually hit this area, but I did not want to miss the signal here, and was okay with entering possibly a little early. But as you can see, I was able to trail per the rules very precisely to exit in a very, very favorable area here. Okay, so enough on that. So as we can see here now, we have a situation where we have another clear high and clear low, and we have a very clear correction. So when we take the ratios to that, we have a very precise 618% test, okay, in confluence with structure, another thing that I teach you guys, okay. Target expectation is nothing more, nothing less than a what? Equal distance move 1-to-1 harmonic ABCD pattern to the downside. Look at the precision by which price completed that, okay. This is not coincidental. This is not something that we can say it happened by chance. No, I just showed you here. Very precise movement, very precise correction, very precise correction, very precise harmonics at here. Okay, now we have a little minor swing here. We can project these also. Let's add them a few times here. Where did the market come to? Here. Where did the market go? Correct there, right? Let's project them forward. Okay, where did the market come to? Right here. Where did the market go to? Right there. Coincidence? Nope, sorry. Coincidence? No. There's no coincidence. There's nothing random about trading. There's nothing random about understanding how these things come together and how you can use them and project them forward. Okay, look at where the market went to. Clear low, clear high, clear low, clear high. Look at that. I just showed you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 instances where harmonics played out in almost every single one of these smaller swings and bigger swings. I'm going to take this a couple of steps further. Okay, we talk about ratios and the precision of ratios. Okay, now clear high, clear low. Where did the market go to? 618. With extreme precision here. We were off by one tick here on hitting the 61.8. Now we say this is an ABCD pattern. How we would have traded this? Well, the entry is here at the completion point in rotation. Profit target is the 618 of the overall swing. Now price has not gotten there, but the break even is at 38%. So at some point we would have been taken out for a break even, but the rules call for this break even point to protect ourselves, because these are what? These are areas where price may find resistance. These are resistance points within a main swing. Okay, so we use these levels as a measuring tool. Fibonacci ratios are a measuring tool to help us measure with some degree of precision certain aspects of harmonics, certain targets of harmonics, certain expectations within harmonics. Okay, and to take this a step further, I want to also continue with the harmonics and show you guys how crazily accurate harmonics are. Let's extend this to here. Let's be even more precise. Okay. Coincidence? No, not at all. Okay. The levels of precision here is just mind-boggling. Okay, that it's just, there's just no other way to say that the market is not random. I just showed you countless examples within today's price action on a 233 tick chart and ratios that play out so precisely within just harmonics extensions and ratios that this could not be coincidental. And there's no one on this planet that can say that Fibonacci's don't work. There's nobody on this planet that can intelligently argue with me that there's no such thing as harmonics and that these things are a fantasy. Okay, I made this video with a specific purpose. I wanted that purpose to be educational to the newer folks that are here on the thread, learning and grinding it out, and to those that come in from time to time and make comments that are completely absurd and so out there that just have no basis or foundation whatsoever. So this is the short video that hopefully brings the issue to rest and will empower some of you to either try harder or to align yourselves with someone that can not only teach you correctly, but also create the right environment for you to learn and to prosper in this business. Harmonics and ratios are by far, out of all the things that I've tried in my long career, the clearest, easiest way to navigate the price chart. Okay, and then you tie into the whole expectations standpoint, where we have here a new structure low, expectation lower high, new structure low, lower high, new structure low, lower high, and then eventually the market is expected to produce that new structure low. But I wanted you guys to have this visual representation to empower you to keep trying, keep grinding. Don't be afraid to draw lines. Don't be afraid to project them. Work off of clear swings. Address your fib ratios off of clear highs and clear lows so that you can have accurate values and target the right areas for your corrections and extensions. Okay, we'll do a couple more extensions for the benefit of some of you guys here, and we can draw another ratio here, 127%. Like I said, there's nothing here that's by chance. There's a very precise order to the markets. Most of the time it will respect these ratios. Most of the time it will respect harmonic completions. There is nothing random about it, but nothing is 100%. Okay, there is a small margin of error. That margin of error is so small that losses in your trading are insignificant because of this. And it's just a matter of aligning yourself with the strength of the market, with the expectation, and executing when your trade comes up, when the rotation happens in the area that you expect it to happen. You can take that trade with confidence and manage your trade with discipline and with a set of rules that allow your trade to not only have the opportunity to achieve a profit target, but also gives you the chance to extend those targets to achieve those extra points that these swings will at times give you, so that you don't leave a lot of money on the table. Okay, I plan to continue to walk this journey with you and show you what I know. We're going to have a live stream on the 21st of February where I'm going to be trading live, my live account, and we're going to be talking about all of these things in real time. You're able to ask questions. It'll be posted on the thread, the link. It'll also be posted on the channel that this video is located on, so that you can do your best to attend. It'll be 9 a.m. Eastern Standard Time. This is all free of charge. I don't do anything to charge you guys, to educate you guys. It took me a long time to put this together. It took me a long time to learn this discipline and to perfect it into a trading methodology that keeps me consistently profitable. And this is my business. I live off of this. I am not one of those traders that says one thing and does another, or hides behind the benefit of hindsight. As you can see, I post my trades live, and the majority of them are winners. I am consistently profitable. I have a couple of days here and there where we get chewed up every now and then. It happens to everyone. but it's how you get through those periods of drawdown and how you bounce back and how you don't let those things become an emotional Achilles heel for you. Okay, so I'm not going to keep talking because I'll start rambling on and on and on, and I can talk trading forever. But I wanted this little short video to have value to the person that posted that comment, and to also the newer guys that are just coming in here and trying to figure out, well, this is something that is it for me? Does it have value? Is it something that I can learn? You can see here the tremendous value that it has. You can see the tremendous precision in the ratios when you learn to use Fibonacci ratios correctly, which is a tool. It's not an indicator, it's a tool. And indicators are tools also. The majority of people use them incorrectly, and that's why there's such a high failure rate. So this is it. And again, I hope this had value. And I'll make another video tomorrow, which is the one I've been trying to make for a couple of days now. I finally have my voice back and I'm not coughing, so I can make the video on how to navigate through the order flow analysis process when the market is in consolidation, and how do we identify which order flow is the one that we want to particularly trade. Remember, we have long-term, short-term, long-term, intermediate, and short-term order flow, and how we can use one order flow to help us have an expectation on a correction and an entry into a harmonic situation. So we're going to cover those things in the next video. It's going to be more of a phase 2 of order flow analysis video that's already out there, and hopefully it'll have tremendous value to you as well. Talk to you guys tomorrow.